You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we do the best we can to make investing and entrepreneurship simple. I'm jazzed, stoked, excited for my guest, Dr. Jerry Dwyer, today. This is going to be so much fun. I actually was reading a book about 19th century banking by one of his colleagues. And I reached out to him to give him a podcast. And he said, hey, if you really want someone, talk to Dr. Jerry Dwyer, who is a professor and a BB&T scholar at Clemson University, a senior fellow at the American Institute for Economic Research, adjunct scholar at the Cato Institute, and research associate at the Center for Applied Macroeconomic Analysis at Australian National University. I could go, the resume continues, but what's really interesting is he's also teaching cryptocurrency classes. So we're going to have a conversation about the old and the new, and with that introduction, my gratitude to Dr. Jerry Dwyer for joining us. Thanks for being with us.
Well, thanks for the invitation.
I guess a lot of people, if they have spare time, they turn on Netflix and watch The Tiger King. So I guess I'm a little odd that they say, Andy, in your spare time, what do you do? I go, well, I'm reading books on 19th century banking in the United States. So it tells you about where my life is, right? But I find it fascinating. And the reason that I've been studying more about that is, you know, before we had central, there was really a time where we, where there were pushes for central banking in a United States bank, and Andrew Jackson was not a fan of that. He'd been burned early in his life by investing in banks, and he was very much against central banking. And so states could chart, you could apply to the state and get a charter for the bank, and once you had your own bank, if you had some specie or some gold coin, you just print notes. Could you talk about a little bit, because I know you have a great grasp of that history, could you talk about just this notion that a bank could just say, we're going to have our own banknotes, we're going to print our own money?
Well, it's a little more involved than that. That is, if you look across states, some states had charters for specific banks. And then some states had what was called free banking, which is mostly what people talk about. Mm-hmm. Now, free banking doesn't mean they were free to do whatever they wanted. Actually, there were free banking laws, and they specified various things. They specified you had to have a certain amount of capital. They specified that if you wanted to issue notes, then you had to buy assets to back them up, and then you had to deposit them with the state banking regulator. That is, it's not the case you could just open up anywhere and issue currency and people would be happy to accept it. That what got acceptability for the free banknotes was that the state law and the state banking regulator stood behind it, and then the assets were deposited at the state banking regulator. That is, the bank didn't even hold them. And that way they couldn't sell them off. I mean, there's an issue with banks, which is, I call it take the money and run.
That's the wildcat.
Basically, you set up a bank, say you issue notes, issue a bunch of notes, and then you leave town. That's
the wildcat bank, right?
Yeah. And there's a supposition, there was a paper a couple of weeks ago by somebody and a lawyer at the Fed, actually, where they argued, that was fairly typical. And the answer is that wasn't at all typical. The reason wildcat banking arose was actually in Michigan. The year it became a state, they passed one of these free banking laws, and it was frontier at the time. It's called the Old Northwest in history. Yeah. So it didn't look anything like Michigan or the Midwest looks like or anything like that. So it was off, and so people would find some small place where the wildcats roamed, and they'd issue some notes, and then they'd just leave. And there was some of that in Michigan early on, but the free banking systems really started in the 40s. And legislators were well aware of all these incentives. And in fact, if you look at the legislative records, when something would come up where somebody was taking advantage of something and it was not good for the note holders, the customers, then they'd change the law to try to deal with that issue. I mean, part of what's interesting about the free banking era is that what made it different was there were specific legal requirements to start a bank. but there was no discretionary approval necessary. That is, the state banking regulator couldn't say, well, I don't think you'd be a good banker, so you don't get a charter. That wasn't an option. As long as you met the requirements, then you were in. And that goes along with the Andrew Jackson theme.
Right.
That is, just anybody could. You didn't have to be well connected with the legislators. You didn't have to bribe them or anything.
Well,
so that was sort of the good part of it.
And you talked about the 40s. The big crash of 1839 was interesting because Jackson was getting nervous about this stuff. He says, you know what, if you want to buy federal land, you're going to have to do it in gold. There was massive land speculation because of the immigration that was going on in Ohio, in Michigan, particularly in what you talked about, the old West, I guess you'd say, as they were expanding west. And so there were a lot of speculation problems. So why would I bring up in 2021 and talk about, free banking? Well, as I look at the rise of crypto, and you teach a course on crypto, I wonder, now just not exactly similar. I'm not trying to make a perfect parallel, but it's interesting. I thought about this about 5 years ago when I was reading a article in Forbes, the Wall Street Journal somewhere, where there was a gentleman's club in Las Vegas called the Legends Room that had just developed their own cryptocurrency. And so now you could go and have a fun night of dancing and drinks, pull out your phone and scan a barcode on someone's ribs and have a good time. And I thought, this is like wildcat banking. This is crazy that when anyone can just decide, you know what, I'm going to have a currency. And as I think about that era you were discussing of free banking, 1840s on, they even had joint stock companies that didn't get charters pre-1840, where people would just print notes, and if you lived in that community, maybe you trusted that institution, use it as currency. If you started traveling away, maybe it had less clout. But just the idea that really back in the free banking, like you say, if you met the criteria, you could get a charter after 1840 without too much trouble if you met the criteria. Do you have any lessons of what we learn in free banking that we can go into as we think about the crypto era, as people go crazy and they say, well, I'm going to use this cryptocurrency or invent one? What have you learned, and what do you tell your students about the positive negatives of crypto?
Yeah, I think there are like two parts in a way. I mean, clearly part of it is currency doesn't have to be issued by the government. That's one of it. And there are other historical instances. And there's a survey article of a bunch of incidences and how they ended, or if they ended badly, which is the common story people want to tell, or they actually ended, some of them ended because the government wanted to print their own money and collect the revenue from printing money rather than letting these private firms do it. And so private currency can work. And there are theoretical papers talking about the fact that it can work. There is an issue that arises, and you see this really in crypto, is that, like Bitcoin, the difference between it and the free banks is Bitcoin's not redeemable for anything.
Right.
Right?
Correct.
And that's related to the fluctuations in price. On the other hand, the stable coins are really very much, except for the fact they're not banks, are really very much like these free banks. So like Tether, for example. Mm-hmm. And it fluctuates very little around $1, actually. And I shouldn't say all of these stable coins, that's not true. But the big ones, they fluctuate within a penny or so of $1.
Well, hence the name Tether, right? I mean, hence the name.
Yeah, Tether is one. Trying to think of the other ones. Circle, and there's a couple of other ones that are pretty big. And those are redeemable. That's a big difference. That is that what they do is they hold dollar-denominated assets, and if you give them $1, they promise to give you $1 back whenever you want.
Right.
And the way they make money is they hold treasury bills and things that pay a little bit of interest.
It's very much like a money market, right? It's very much like a money market where they really don't want to break the buck, right? I mean, that would be their risk.
Right. It's a little different, and yeah, it's kind of like the money markets, except the money market funds are not allowed to tell you or promise to you that they will give you $1. Mm-hmm. That is, they do it in practice, And then they have accounting practices to create that outcome.
And they go defunct if they couldn't deliver, right?
Well, because everybody thinks they're going to.
Right.
Right. And the cryptocurrencies, they promise to give you $1. That is, if you have a tether, if you have a USDC in particular, then if you go back to the firm and you give them your coins, then they will give you dollars back. And they promise to do that on demand. Whereas money market funds aren't allowed to promise you that.
Right.
It's just that they've engineered it so that for practical purposes, it is $1 with penny rounding and amortized accounting of the losses.
As you look into the future, let's go back to Bitcoin again. I think people fall into dogmatic ideas very, very quickly. Once they espouse something and someone with authority says, hey, this is the new thing, and they get excited about it and it's cutting edge. It reminds me of the 2000s when Al Gore claimed he invented the internet, and no one really knew what the internet was, but they knew it was going to be big. And we had a lot of winners and a lot of losers in that dot-com bust. But as I look at Bitcoin, people talk about its portability. And they say, well, this is nice because it's independent of a central bank. And, if you want to get on a plane and go to Australia, you can't take your gold with you through security, but you can take your Bitcoin as portable. But a fiat currency is, by declaration, if your government has the ability to throw you in jail if you don't pay taxes, doesn't that really circumvent this idea of portability that, oh, yeah, I'm not going to be subject to the central banks and to a government that I don't like because I have Bitcoin and I can trade Bitcoin. If you have to pay your taxes, if you're in the United States, you got to pay your taxes in US dollars. Doesn't that put the US dollar in charge because of law, because of decree?
Not necessarily. It depends on the transactions, right? I mean, if you're going to, basically the idea is there's two parts to it. One of them is the argument that, well, the government accepts taxes in US dollars and nothing else. And so people are going to end up using US dollars at least for that. So they're going to have to hold them for a while. So that's one part of the argument. The other part of the argument is US dollars are illegal tender. And so even if you write a contract and you say you have to pay me in Bitcoin, then they could pay you the dollar equivalent and you couldn't stop them. But that doesn't necessarily mean people want to use it. These stable coins actually are used a lot. Most of the usage comes on exchanges for cryptocurrencies. Mm-hmm. Probably. They're used a lot for that. You can look at the numbers on a website called coinmarketcap.com, and they have just the trading volume over the course of a day, and it's very, very high for some of these stable coins because they're used, like when people want to sell Bitcoin on some exchanges, they trade them for Tether, and then they take the Tether and maybe they'll buy Ether. Mm-hmm. Or whatever it is they want to buy. Or they might trade it for US dollars and then withdraw the money. Or they might download the Tether to a wallet. So they're used in transactions on these exchanges. How much more they're used for other things? I've seen things where people talk about for international transactions, they can be a very cheap way of executing them because you don't have to go through a bank and all of the costs that are involved in doing that.
Circumnavigating a bank is a big deal, yeah.
Yeah, well, it always surprises people. For a while, I taught at Trinity College Dublin, and I was still in the U.S., all right? So they'd mail me a check denominated in euro, then I would take it down to my bank, and my bank would then take the check. They would keep $75 of the check for processing it, and it didn't matter how much it was, and then they'd take a month and a half to clear it. What happens is, it has to go through a whole series of banks to finally end up at the bank in Ireland. And at every bank, there's incompatible accounting systems. And so it's actually very costly to clear all of that. Whereas if you want to send some money, say from Ireland to the U.S., and you don't want any price risk, so you don't want to use Bitcoin, you could use USDC, and I just, do a transaction on the Ethereum blockchain, and it clears, in a matter of minutes. And it's much less expensive than $75. And so I'm told, or I've read, that people use them for some international transactions even. I mean, the advantage stablecoins have is, it's like anybody who owns Bitcoin knows, well, I went up to $60,000, and then it went down to 30 or maybe a little less, and now it's around 40. And you really don't want your checking account bouncing around in value like that. Not many people hold their checking accounts in U.S. stocks even.
Yep. That let me interrupt you there. That's a huge point. I've stayed neutral on Bitcoin. I've traded a little bit. I have some. I look at a hedge against inflation, devaluation of dollar, all that stuff goes on. But when it first came out, the word currency implies movement, a river current, an electric current. And you mentioned a checking account that wouldn't hold stocks in it. I agree. If I had $7 million in my personal checking account, people might say, what do you need that? Why do you need that much? There's investments to buy. Where currency, the purpose of currency seemed to be pay my phone bill, buy my groceries, put gas in the car. Currency just seems for the things I need, where it seems now crypto, it seems to me like people look at it much more opportunistically as an investment than the practicality of exchange. Any comments on that dynamic?
Sure. Well, I think I think that's true. Part of it is that whatever your liabilities are in, like your gas bill or whatever, that's what you want to hold in your checking account, because then you don't have to worry about exchange rates. Now, the thing is, there's a lot more going on. Cryptocurrency makes it sound like, well, the only thing it could be used for is currency. That's not true at all. It's used for smart contracts. There's a lot of them on the Ethereum blockchain, especially. That's really geared to that, as opposed to being some kind of currency. And there's all this decentralized finance stuff, DeFi, and it's not clear where all of that's going to go. But it's clear in terms of the transactions, in terms of recording them on a blockchain. You need a token of some sort, which is what Ether becomes in that context. And the demand for that, depending on exactly what happens with all of these things, could be quite high. And so it could end up being the case that the current $2,400, I think roughly, for Ether will look very low 2 years from now. On the other hand, it might be the case, that the federal government stomps all over cryptocurrencies and decentralized finance, and it's not worth nearly $2,400. I mean, so it's very speculative in that sense. But the speculation comes in not so much that it's a currency. And even Bitcoin, you think, well, Bitcoin's underlying computer language is geared to make it very simple. And it was done to prevent infinite loops, really, technically, just to prevent the thing from going haywire. So keep it simple. But what people have done is you can take Bitcoin and you can create what are called wrapped Bitcoins that you can then use as collateral on the Ethereum blockchain for various transactions. And so Bitcoin, being a first mover, gets a lot of press. People sometimes use Bitcoin instead of saying cryptocurrency, even now. And like I say, but the uses are way beyond just currency.
Let's talk about that. Let's talk about two things I think you've hit on that I think listeners would be interested in. The first one is, let's talk about blockchain as a technology and as a protocol itself. If we would have had, let's say, the last U.S. election, why don't we use blockchain technology to vote? You talked about other applications. Would we have saved a lot of headache and political saber rattling and accusing and problems if we'd just developed a blockchain technology for, say, voting? And why?
Technically, it's possible.
Yeah. Why haven't we? Why haven't you seen blockchain?
Access would be the issue.
Yeah. Why haven't you seen Is that it? I was saying, why hasn't blockchain gotten out of currencies and into other things faster?
Oh, it has gotten into other things. I mean, just like we were talking a few minutes ago about clearing a check all the way over to Ireland. There's the hype part of it has calmed down from a couple of years ago, but there's still a lot of interest in financial circles in using blockchains for clearing things, because you get finality, which is very important.
Yeah.
You can't undo it. And also, everybody's using the same protocol.
Yeah.
And so the problems that arise trying to clear a check between, say, a bank in St. Augustine, Florida, and Dublin, Ireland, and all of the banks that it's going to go to in between, they're all using the same system. And so it can all happen almost instantaneously. And there are estimates, nobody's saying that application is going to say, raise GDP by 4% or something like that.
Right.
But nonetheless, it's going to save billions of dollars. And banks are working on that.
It's a huge discussion.
They're different than the cryptocurrency blockchains.
Yeah.
Because there's this issue of who can write on the blockchain, where with Bitcoin, anybody can. You can submit a transaction, at least, and anybody can be a miner for that matter. Whereas these blockchains are permission. You have to have permission to do it. So you'd have to be a bank that I want to deal with that would be doing it.
I love this conversation because cryptocurrencies are so relatively new, and here you've got these young students learning about it in college. You got old guys like me that I don't know that I'll set foot in there again. They probably wouldn't accept me anymore. I probably couldn't survive now. But the education and the need for the public to become up to date. Let's talk about the protocol and some of the risks that could be there. Because I love the discussion as an investor. Is before I buy a stock, I try to poke holes in it first, and that's kind of what I try to do with crypto. I'm going to try and poke holes in it because investing is about risk management above all. And the more I understand it, the more I can poke holes in it. I say, well, that's not a real hole. That's not bad. Well, okay, we can deal with that. Oh, that's not as bad as I thought. And you kind of have to put it through the jury and through the trial before it's worth the money if you're a good investor. Well, let's talk about obsolescence risk. We have hypertext transfer protocol. The web, it's stuck, right? We have email protocols, SMTP, we have protocols. So now we have a blockchain, which, like you say, is a protocol. I don't know if people understand that. But at the same time, protocols and softwares, I know they're different things, but when we hit the information age, there was a company called WordPerfect, and they were really dominated the word processing space. They're not even around anymore. When we had Netscape come out, they were really the ones that first leveraged hypertext transfer protocol really, really well. We haven't even heard about Netscape now. As you mentioned, I think very astutely, Bitcoin was the first one that really took advantage of the blockchain protocol. But is there obsolescence risk for Bitcoin for the same reasons Netscape is gone, WordPerfect is gone, Lotus 123 is gone, Napster is gone? They all use these protocols that have stayed, but there have been new people using the protocol. Is there obsolescence risk with Bitcoin that way?
Oh, I think there's some. I mean, part of what you have going on, though, is that there's a group of core developers who are interested in Bitcoin, and they introduce changes over time. It's just like Ethereum had what's called a hard fork, where they introduced things to try to lower the transactions costs on the Ethereum blockchain because they were getting to be too expensive. And so the technology is not set in stone. And as long people have, because it's open source, people have to agree about doing the upgrade. It's not like Microsoft, which can just decide to do it.
Right.
They have to get all their customers to agree this is really an improvement, would be the equivalent.
Oh, these are such good
And
points.
there's lots of cases where I wouldn't. But so it's not this case that is set in stone. If it were set in stone, then for sure it would be superseded. That you'd want to look for the next best thing, and you'd constantly be looking for that. Like I say, Ethereum, there's a core group of developers, and they're adding capabilities. They actually, one of the big issues about a lot of these permissionless blockchains is that they validate blocks. Basically, it uses a lot of electricity in the process. And basically, the idea is to try to get away from that. And nobody's really succeeded in doing that. But if they figure out a way to do it, then they'll have an incentive to do that, and they will. And so the technology is not set in stone. WordPerfect actually still exists.
Do they?
Corel sells it. Who buys it? I don't know. That's a different question.
That's what I mean. I guess I went to a superlative or an extreme. I say they're not around anymore. I guess there's someone who's
you
loyal.
said they were not around anymore, and actually, I happen to know they are.
There's probably someone that says, look, damn it, I'm sticking with my word perfect. That's where I started, and that's what I'm dying with. There's probably someone.
Yeah, well, that's probably true. And I had a secretary, actually, when I was at the Atlanta Fed, who had a really strong preference for word perfect.
Well, I guess you can.
And that was up till 10 years ago.
She can
what she's doing
files.
right now, I don't know, but.
Hey, these are, I just appreciate, I know I'm throwing questions rapid fire, but I like to get as most out of the interview as I possibly can. If you look at the study of money, it's just what a dollar is. It used to be a coin that was minted out of silver. And people in the United States says, there's plentiful, there seems to be a lot of these. Thomas Jefferson was a fan. They say, you know what, let's make this dollar what we use. Britain can have their pound, but we have this silver coin. Then a dollar became this note that was redeemable for a silver coin. Then the dollar became a Federal Reserve note where the Federal Reserve, and then you had Bretton Woods that says, well, it's a fraction of this and we'll be the world's reserve currency. And then after Bretton Woods, you go to 1971 and Nixon says, you know what, this silver's hard to come by, it's not working out, let's go out rid of that. Now you have a dollar, which is really an electronic entry on a ledger, almost like a basketball game where we keep score. Well, let's give these guys some points because they gave us some of their bonds, right? And so money has changed tremendously. I don't know that the electorate or the general public really understands what a dollar is anymore. And so they have all these changes. Well, one of the things that the dogmatists that just Bitcoin is it, right? There's nothing better than Bitcoin. They say, well, it has this limit in supply and it's almost like a half-life, right? Each year they can make less and less. And I think it's like 2000, I don't know what the year is when it ends. But there'll be this time where they say, well, we're not going to make any more Bitcoins, and that's why the value is going to go through the roof because of this scarcity. But and I says, guys, so who says so? They go, well, they said so. I go, well, they said that about Bretton Woods. They said that about a dollar. The Fed has changed. They change their mind all the time now on what the policies are because it's open source. Is there a democratic process that could say, you know what, we could use some more of these, it's not going to hurt us? Can they change their mind just like Nixon did, saying we're not on a gold standard anymore, let's move on? I mean, are those risks there of change?
But the people who are deciding hold Bitcoin, and if you said tomorrow, well, we're going to double the supply of Bitcoin, well, the value would go to zero. Mm-hmm. And so these people who are deciding the value of their holdings of Bitcoin would go to zero. And so they don't have an incentive to do that. The only reason they'd have an incentive, see, the supply rule is actually really, really important. Let's leave the federal government out of it. So I'm a private entity and I issue currency. And how much am I going to issue? If I just issue as much as I want, well, when I want to buy a bigger house, I'll just issue some more currency.
Right.
And when I want to get a Maserati, well, I'll just issue some more currency. And so you don't know where this is going to end or how many there's going to be. There's nothing that really limits the supply because they don't have to be redeemed for anything. And so the quantity rule is really crucial for Bitcoin having any value at all. And it's easy to tell if they cheat. Mm-hmm. If they didn't say they were going to increase the supply, but they just did, then you would know because it's on the blockchain.
Yep, it's on the blockchain.
And so it's verifiable. And so the quantity rule is very important. Now, like you say, it's possible you could imagine it being changed, but the only way I could imagine it being changed would be if it would increase the value of Bitcoin. I mean, the deal with federal government is totally different. The deal with the federal government is that it's not like they own any dollars anymore. They own as much as anybody else for currency and other things. Right. And for the federal government, there's a big incentive, that's really big now, to inflate away the value of their debt.
For sure.
And so we print more money, and then we promised you $1,000, and we will give you $1,000. But it won't buy what it would have bought before.
Yeah, you can buy a gallon of gas with it too, right?
Yeah.
Let's talk about that. That's a huge dynamic. So I've thrown a bunch of questions out, not being critical of Bitcoin, but more like, what about this? What about this? What about this? It's good food for thought. Now let's switch the other side and say, hey, is Bitcoin, or as you say, let's not make that synonymous with crypto in general. But as you mentioned, I feel like we're moving towards more monetary theory ideas in terms of how we look at debt. And we have an interesting fiscal policy that feels different to me in the last few years than it did growing up. I'm 53 years old, so I remember, Reagan talking about the deficit, and Ross Perot's got his little charts up there, saying, hey, we're going to have the deficit here. And I remember all that stuff. But there seems to be, with the Stephanie Keltons of the world, the Warren Moslers of the world, the Bernie Sanders of the world, saying, look, there's a deficit myth. This deficit doesn't even matter. What's your thoughts on MMT and how that relates to the culture of Bitcoin, and how those two could coexist, compete, not compete, be in harmony? What's your thoughts on MMT?
The name I have for modern monetary theory is ancient monetary fallacies. There's nothing new in it.
Yeah.
Literally nothing.
Is it just, is it Keynesian economics in a new name?
Yeah, it's older than that even. Yeah. No, it's just, these are really old fallacies. We can just print money and use that to buy things, and, we'll worry about it if it starts to create inflation. Well, it's going to start creating inflation right away. The irony right now is, other than the people who are MMT proponents, which is a small minority, monetary economists think MMT is it's just totally wrong. It's a bunch of fallacies.
Yeah.
But it's what the federal government is doing.
I was going to say, there's a small amount of people.
I wanted to come back to what you were saying.
Right.
Is you look at what they're doing, it's like, we're going to issue another $3 trillion in debt, and the Fed's going to buy it. See, and that worked. This goes back to the financial crisis, and without going into all the details, in the financial crisis, basically, the Fed was buying government debt and mortgage-backed securities.
Yeah.
And I was there at the time. But they set it up in such a way that it didn't affect the money supply in the U.S. It was explicitly designed not to affect the amount of currency and deposits in the U.S., and it didn't.
Yeah.
Now, what's happened recently is the stimulus checks in particular.
Helicopter money.
It's like a helicopter drop.
Yeah, helicopter money.
They just say, here's some money.
Yep.
And it's dropped into your checking account. And then the Fed buys the underlying debt. And so this is really more like MMT. The other is not like MMT at all, but this is, where we're just going to give people a bunch of money, and then we're just going to finance it by adding it to the Fed's books.
Who's going to argue with that? I like it. I didn't get any of these checks, but I'd love to have one. If they send me one, I'll cash it. I mean, that feels good, right?
Well, of course, everyone will.
Yeah.
Even if you know, which it will, that it's going to create a substantial amount of inflation. I mean, prices over the next couple of years are going to rise 15-20%.
Yep.
This year is just the start. And it's because of all these checks they mailed out. Now, if you get a check personally, well, if you didn't spend it, then what effect would you have on how much inflation is going to be? None.
Yeah.
So you might as well spend it. In fact, you should spend it soon.
Spend it while you can.
Because it'll be worth more if you spend it soon than if you wait till later.
Well, and I don't want to get too much in the weeds here. We'll come back and circle back to how this affects crypto in a minute. But one of the things I'm fascinated with is Charlie Munger's on CNBC. He's a little more outspoken than Buffett is. Buffett's a little more measured. Charlie's really candid. And Charlie says, we keep doing this, it looks like Venezuela. And people say, well, that's not going to happen here. I love to ask every expert I have on my podcast, you go 15%, 20% inflation, you revisit the 70s, right? The late 70s. But
sure.
what is it that makes this turn into, like Munger says, this is going to wind up looking like Venezuela if they don't get this under control? That's not going to happen in the United States. Could it? Or no? Or they say, well, the Fed will just raise rates. Yeah, but you kill equities, you kill the housing market. I don't know, the Fed can't even, like every time they've tried to raise rates, and even when Jerome Powell went to patience, the market said, no, we want this free money. How do you see this playing out?
Yeah, the famous tantrum.
Yeah, how do you see this playing out? I feel like the Fed was trying to deleverage, kind of get their balance sheet back, kind of get it back to where it was. But right before COVID hit, like the fall before COVID in 2019, it seemed like Jerome Powell just said, you know what? No, we're going to have a new policy of, close to zero interest rates, and we're not interested in getting back to the old days. How do you see it playing out?
A key aspect of monetary policy right now is the Fed has no control over the quantity of currency and deposits in the economy. The only way they're really controlled or affected by what the Fed does is by what people think inflation's going to be.
Mm-hmm.
All right?
Mm-hmm.
So that's why they keep talking about expected inflation, and people aren't going to expect it to continue, they hope.
They think it's transitory. And that's bared out in the backwardation of commodities futures many places, right? A lot of people believe. I mean, we're in backwardation in a lot of places.
Oh, I know. Yeah, they're in for a surprise. I mean, because it's, in the end, the quantity of money that was dropped on people is going to be spent on stuff.
Yeah.
And like there isn't more stuff around.
And like you said,
and so it's like what we're seeing is people are trying to buy stuff. There's, firms are starting to raise prices. They're starting to raise wages.
Which makes people want to spend sooner.
The risk to the Fed, there's like two things. One of them, or the risk to the Fed is people start to expect more inflation.
Yeah.
And then not only will you get this 15 or 20% increase in the price level, all right, which is fairly substantial inflation over 2 years even, 7 or 8% a year. But then if people expected 2% the following year, then it would be 2. But how likely is it after a couple of years of 7 or 8% inflation, people are going to say, oh, it's going to be 2 again? It's not very likely, actually.
Let me spend my money now while it still has value, which causes it to go faster, right?
And see, the problem, I mean, this came up because it's a panel I was on, and it got me thinking about it, is, you think right now interest rates are really low, and so debt service should be pretty small, right?
Yep.
It's actually 14% of all federal government revenue goes to interest payments.
It's astounding.
At the current level of interest rates.
So
if you raise interest rates,
which are not great,
say short rates to 5 and long rates to say 7, you're looking at something on the order, over a period of a few years, something on the order of 2/3 of all federal government revenue would have to go to debt service.
Yep. The treasuries. Yep. Brutal.
Yeah. I mean, basically you end up with a sovereign debt crisis.
Now you're Greece.
And there's two ways of dealing with it. With Venezuela, a lot of their debts were in dollars, and so they just had to default.
Mm-hmm.
In the U.S., well, the debts are all in dollars. You just print more dollars. But that just means even more inflation.
Yeah. They're in a heck of a mess.
They're in a real bind, because if they raise interest rates, it's going to raise their debt service. And so naturally, Congress and the administration are going to complain bitterly. And if they raise them very much, it's going to have big effects on the budget. I mean, I was amazed to see that the current debt service is 14 or 17% of all the federal government revenue goes to interest payments.
That's a huge statistic.
Interest rates, I mean, Treasury bills pay, 6 basis points?
Nothing. Yeah. They play almost nothing, but enough to be 14%.
It's as close to nothing as you can get and not be nothing.
That is astounding. I did not know that statistic. I wouldn't have thought it was that high. I knew it was big, but I wouldn't have guessed 14%. And you're right. I mean, not only do you kill equities, you kill the real estate market, you kill business in general, but you also create a huge sovereign debt problem if you raise rates, because you've got it. Because what do you have to do? Well, you have to sell more treasuries, because you're always having to sell bonds to keep this engine running. How does crypto figure into this then? I mean, when a person is looking at crypto not as a currency but as a hedge or an investment, I look at my financial statement as an investor. I'm buying things. My least favorite is trying to go for a capital gain. The buy low, sell high thing's hard to figure out. My favorite thing is to buy something that will generate cash flow, the dividend, the ability to sell maybe an out-of-the-money covered call pretty conservatively. But the third thing is you can hedge. You're going to buy some gold simply because you don't believe the dollar will be around.
Right.
Where do you see Bitcoin in the future, or cryptos? Is there any protection here? Is the Wild West? The volatility, they're starting to trade options on some of these, and the spreads are ridiculously wide, and the volatility, the risk is just huge with cryptos. I mean, they're so volatile, and I know, and you have a stable coin that's tethered to the dollar. Well, then it's tethered to something that's going to inflate. Like you've
right,
tethered your
stable coins, obviously.
Right.
But there are stable coins that are actually stable relative to gold.
That'd be probably a bigger thing, because if I think to me it doesn't make sense. I'm going to go to crypto because I don't believe in the dollar, but I'm going to tether my crypto to the dollar. I'm going to chain myself to the sinking ship with gold. Right, that isn't going to do any good. Exactly. So
nobody's come up with it, but obviously the thing you'd like to come up with would be a cryptocurrency that was a good hedge against inflation, which they're not. I mean, even the one tied to gold, it's like, well, you might as well just buy gold.
And even gold, and let me get all the gold people mad at me, and I'll just declare that I own gold. I have physical gold and also paper gold in ETFs. But here's the thing about gold, and this is sacrilegious to the gold bugs, and I'm a gold bug, so I'm making enemies right and left. We used to have seashells, tally sticks, rocks. Has the time of gold... Is the gold an 8-track tape? Is gold a phonograph? We live in a digital age. Has gold run its course as currency? All these gold guys say in 1971, the dollar became worthless because you unhinged it from gold and the dollar was no longer money. Couldn't you make an equal argument and say, actually, no. In 1971, gold stopped being money and debt became money. Couldn't you make the same argument?
Well, and you could argue that gold actually quit being money quite a bit before that even.
Yeah.
But that was really just the nail in the coffin.
Is gold on the way out and
I
crypto on the way in?
I don't think gold is money. I mean, you can make it a hedge against inflation in dollars, or silver might be better now. I don't know.
Silver's probably got more upside relative to gold as you look at the ratio where silver is usually been to gold, that spread is widened to where silver should. And silver's a bigger consumable, so you would think silver's the better bet from that standpoint. Mm-hmm. But is crypto killing precious metals? I mean, is a lot of the money going to crypto used to go to precious metals, or gold guys saying, I think crypto's it? Because the money I have in crypto... I just think it's so
volatile. It's hard for me to think of... I mean, I know people have done research articles in terms of, what's crypto a hedge for, or is it a hedge for anything? Yeah. I just think of it as so volatile. It's like when people ask me about, well, should I buy some Bitcoin? I say, only if you're willing to let the money go to zero and if you won't stay awake at night.
Just go to Vegas. I don't know.
Well, no, I wouldn't. There, the odds are stacked against you.
Yeah.
With Bitcoin, there's upside. True. It's not clear the expected value is negative. It's so volatile.
Yeah. You've been so gracious with your time. Huge thought-provoking stuff. And I've thrown a lot of those questions. I've thrown at you a lot of other people, and they haven't had answers. And you've had good answers. And that's what we really look for. This was
fun.
No, we really look for this.
I think about all these things, so
I can talk about it all day long. I think it's fascinating. That's why I'm not watching the Tiger King. I started watching the Tiger King, and I felt I don't have many IQ points to spare, and I felt I was losing a few. So I thought I better turn this off and read some books on 19th century banking and joint stock companies trying to print their own money. Let's end on this note. You've been so gracious with your time. You're an educator.
It's been a pleasure.
You're an educator, and my feeling is. Most people, if we went to a local mall and said, hey, listen to this podcast that Andy had with Dr. Jerry Dwyer, I'm not sure that this is in their purview. I'm not even sure how many would follow the conversation, not to exalt us. We just have a different focus. There's things they could talk about we would be clueless on. But as an educator who is looking in the faces of young people, trying to create a situation where they can go into the world with the best advantage possible. What does the role of financial education play in society? Because if I said, hey, I took an economics class in 1983, right? I've taken my economics class. I'll tell you, the powers of the Fed doesn't even look like it did even 10 years ago. And their powers are so much different. Politically, is there an education deficit when it comes to financial education? What are you seeing from the students? How do they take this stuff in?
Yeah, one of the things, so I'm teaching in an economics department. When I was at the Atlanta Fed, I was in the finance group. One of the things I find in the economics department is people can go through their entire undergraduate degree in economics, and they don't know anything about financial markets. They know virtually nothing about banking. And so one of the things I try to do in the classes that I have actually is you know the book, is have them read Burton Malkiel's book, because it's relatively readable. It's got nice stories in it, and it's correct. And so what I try to do is get them used to the idea. They have trouble with the idea, well, so if a corporation issues bonds, well, why do we care about the price after that? Well, because people will trade them.
Yeah.
Really?
Value. Mm-hmm.
And you have a hard time. Students, remember, they're like 18 to 22 years old, their experience with the world is pretty limited. And so their knowledge about all of the things that exist out there is really pretty limited. And so just getting them used to the idea, whether it's used to the idea that people trade stocks and firms after they're issued, and that's all the stuff they're reading about, it's not issues.
Right.
That bonds trade afterwards, that treasury bills trade afterwards, cryptocurrencies trade all the time in all of these prices, and that these markets are informative, and that if you have any assets, then you have to think about how you're going to allocate them in a way that's going to produce outcomes that you like.
Is there a danger? You mentioned that a person can get an economics degree and they might be academically astute but functionally incompetent in the world. And what I mean by that is, take example the 401k idea. If you look at a financial statement and you look at a pension is a liability of a company that pays an expense from the company that becomes income to the person. It doesn't touch their asset column. It is a function of income and cash flow and expense as opposed to the net worth of their balance sheet. All of a sudden, you decide to have a 401k, and it eliminates that liability now the moment they quit from the company. It no longer produces income. It no longer becomes a function of the P&L statement, becomes a function of the balance sheet now. Now you have a nest egg that you got to outlive, and it is an hourglass of expenses sucking money from the asset column. Well, when the average person in the 80s or in the 1980s, 90s when it got big, in the 80s and 90s when we went from pensions to 401ks, people, oh, this is awesome. And they did not see the functional change in a financial statement in their households. You also mentioned something I thought was a great point that people shouldn't miss. You said, well, there's a relatively small amount of people that really are fans of MNT. Most people think it's baloney. I've yet to interview one PhD that has been a fan of MMT. I haven't been able to get Stephanie on the show yet. I don't know why. She didn't want to talk, I guess. Or
to you, anyway.
Yeah, not to me. And so
you wouldn't be very sympathetic.
Well, I would be cordial and polite, though, right? I think we need to have better dialogue. There's too much division and vitriol. We can't, we need to look at it like investors. What are the pros? What are the cons? Let's just see what it is.
Right.
But you made a great point that here we're having the most robust, you're fighting with China, but we're still the most robust economy in the world, I would think. And yet we're putting ourselves in a fiscal and a monetary policy shackles. And the electorate can't see this because they're getting stimulus checks. So that's why I thought, what are your thoughts on the importance of financial education, even if I'm not in college anymore? Can you help with these students, with the new guys? Or what about all those thousands and millions of old guys? What are your thoughts on that?
Yeah, you mean more the practicalities of the federal budget.
Correct.
The trouble, it's related in a way to something you said earlier, is it's all very abstract.
Yeah.
It's
I'm
like
in a
the federal
voting booth.
government, they're going to issue another $1 trillion worth of debt. Well, the last one didn't seem to matter very much, so presumably this one won't matter very much.
Right. I'm making decisions about my country based on my household, and everything seems fine now. And I'm not a Democrat or Republican. I'm neutral. I think they both have insane problems. We've grown this problem with, we've gone from $1 trillion Fed balance sheet to an $8 trillion Fed balance sheet in 10 years, 11 years?
Yeah, 11 or 12.
I mean, that's crazy to me. It took us 200 years of history to get to $1 trillion in currency supply. Now you got 8, and it's doubled in the last 1 year. So to me, should I be alarmed? I'm alarmed at the lack of knowledge people have. I feel like an Old Testament prophet. Maybe I'm Chicken Little. Maybe I'm Paul Revere. I don't know which one I am. But in any event, wonderful discussion, Doctor. I thank you for your time. You're a busy guy. And, the people who have signed up for your classes or the students get you all the time. Thanks for sharing some of your knowledge with the rest of us.
Oh, well, it's been fun, Andy.
Way fun. So,
absolutely.
So enjoy your time with the Tigers and go Clemson, right? All right. Fantastic.
Yeah.
Thank you so much.
Go Clemson. Who knows? Maybe number 1 this year. You've
been listening to the Cash Flow Academy podcast. We've talked about cryptocurrencies, monetary policy. We covered a tremendous amount of ground. Hope it was thought-provoking for you. And the biggest thing I hope is it inspires you to learn more from me, from others, read the books. Could you give Burton's book out again real quick before we...
Sure. It's called The Random Walk Down Wall Street.
Yep. And it's a great book. I've read it. It's great for your library. So with that, I thank you, and we'll see you guys next time.
You've been listening to the Cash Flow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.